after him, Tom Sosnoff. And so I can't have those two back to back without sharing these pictures. And Adam, I promise I'm going to print our more current picture of us. I think this is us like 5 years ago. But I met Tom, I don't know, that's probably about 15 years ago. And then Adam and I, we always get together when I go to the city to work. And so Adam, I appreciate you coming in today. Here he is. He's going to be talking about his ultimate option success formula. And he's one of those guys that's not just a great trader and well-known in our industry. He's also a guy I consider a great friend. So Adam, I'm going to go ahead and let you start your screen share. You there?
Yeah, I'm here. Thank you. Thanks for having me. This is my first Zoom webinar experience where I have to show my face. I didn't realize I saw you guys on video and I ran up. I still have a sweatshirt on. I threw water in my hair. So I was like, oh wait, I'm going on video? So
you can turn your video off. We don't expect you to have to share your video.
I don't know. Are you supposed to? What's the audience think? Is it better with the video or is the video distracting?
It's totally up to you, man. It's totally up to you.
Totally up to you, Adam.
I'm gonna let you try it. It'll be the first time ever. But you know, if you don't want to look at me, let me know and I'll shut the screen. All right.
All right. You should be able to share your screen now.
Yep. Okay. I just need to find the Zoom thing. How do I get the Zoom back? Yeah. Am I showing my face right now?
I see your face. Mouse around and you'll see a button pop up that says share screen. It should be at the bottom of all the speakers, like all the speakers you can see.
All right. Here, let me just go back to the here.
The green button says share screen.
Yeah.
It can be tricky. You see the box with all
I got it.
Okay,
yeah.
cool.
So I'm gonna share okay. All right, I'm gonna share my PowerPoint share.
And I'll tell you what I'll do when we get to the top of the hour. I'll throw up a 2-minute warning for you. How about that, Mr. Clockman?
Whatever you need. Whatever you need.
I appreciate you so much.
Okay, so this is okay. Now I got it going. All right.
I see you. I see your face. I see your Phoenix.
Cool.
Awesome. Thanks for coming.
All right. Thank you. And then there we go. I'm just gonna get the chat here. Perfect. All right, now I got the chat from everyone, which is cool. What's up, everyone? Nice to be here with you. Again, first time showing a video. Quick disclaimer, no one can ever guarantee profits or ensure freedom from losses. I would never do that with you. But I do have a great presentation for you. It's very relevant. It's time sensitive, related to this market. Extreme market conditions, and that's what it's been. In the month of March, we saw the S&P fall. For a while, it was moving 6% a day. Good morning, which is great. And just so you know, I'm going to talk a little bit fast. My cadence will be a little bit up just because I want to respect the 1 hour window. Great speaker coming after me that I'm going to be excited to introduce. So I want to respect the 1 hour window. So I want to get it all in and also make sure that I can answer your questions, okay? So I'll go through the presentation and I'll make sure we have time for questions and we'll go from there. This is a chart of Beyond Meat and it's almost gonna be like a magic trick. I'll show you this chart, then I'm gonna add 2 lines to it later. And from beginning to end of the presentation, this chart will have a whole lot more meaning, which I'm excited to do for you, okay? And this is the move that it made. I gotta move this box over here, there we go. This is the move that it made after that, and I'm gonna show you what gave us an inclination that's about to happen. By the way, Beyond Meat has earnings tonight, so careful if you're thinking about trading right now. We got into it over here, January 9th. Our options were worth $3.75, and we sold them 4 days later. They were worth $50.75, which is what we're looking for in a trade. That's not the typical trade, but that's what this can set you up to do. And I'm going to show you exactly what it is. Okay. All right. Again, these are the charts we look for. Tesla at 244 before it went to 900. Before Elon Musk told people that his stock was too high. Shopify, it found for us at 325. And now you start to see the other lines come in, which is the Dow and the NASDAQ. And what we're going to look for, I'm just trying to get your eyes adjusted right now. So by the end of the presentation, this becomes familiar. What we look for is divergences. unusual breakouts on no news. So in this example, you see Starbucks outperforming the Dow and S&P 500 on no news. That's going to be important to us, whether it overperforms or underperforms. There has to be no news, and those are the kind of trades we look for. Same thing with Slack right here, a stock that is overperforming or underperforming the market. So work is in dark blue, the Dow's in light blue, the S&P 500 is in purple, and you see right here, even in a down market, this is when the market was getting crushed in March, even though it's going down, it could still be outperforming the market. And that's what we're going to look for to trigger our trades, okay? Before I got to this point, a long time ago, and it's funny, it's actually Jeanette that told me it's important to let people know your backstory. And this is my backstory. I had reached a point, it was around 2000, maybe even 1999, where it was going to be the last trade I ever made. And the reason for that was I'd only been trading a couple of years, and margin requirements were different then. On a $50,000 account, you could be given over $1 million in buying power, which means you could blow up an account very quickly. And I had done that. I was almost out of my own cash, even though I still had all the buying power. And I went to the owner of the firm and I said, what do I do? And he said, what's your plan? And I realized I was trading with $1 million and I didn't have a plan. So in those situations, you try to gravitate towards something. And what I was thinking about was what this guy, Joel, who was my trainer, had taught me, which was, he always said to me, I love stocks making higher highs or stocks making lower lows. And I always found that to be interesting. Stocks making higher, you want to buy stocks making higher highs, sell stocks making lower lows. That's not really what we're taught, right? We're taught buy low, sell high. He was buying high, selling higher, selling low, selling lower. And what we all want when we're teaching people is for you to take your personality and put your own spin on it. And that's what I did. I took what he had shown me and I added my own spin, which was I want stocks that are strong in weakness or weak in strength. And so at that point, the stock was PeopleSoft. And it was the only stock not going down when the market was. So I got out of all my random positions and I loaded up on PeopleSoft. I went out over a 3-day weekend. It came in on a Tuesday because the market was closed that Monday. And PeopleSoft was up. I was up like 25 grand. I sold it all. Market had a terrible day. Everything else would have been down. And from then on, I was off and running and I was able to stay in the long game, which is what I want for all of you, to be able to trade for years and years. And the way you do that is if you have a plan. And sometimes it could just be doing one thing really well that allows you to be successful in trading. So I'm going to give you a couple different ways to look at this because I really want you to learn it. And I feel like a teacher. All my kids are getting homeschooled on Zoom right now, and now I'm doing the same thing. So I've seen this more and more. This is the new way to teach, so I feel good. If you look at the circle dates, March 17th and March 18th, on March 18th, you could see that this is a chart of the SPYs. The SPYs were down 13 points, which means the markets were getting crushed. That would be like a 1,500 point down move for the Dow, right? And so when you have this kind of down day, I'm going to look for something with strength. And what I saw on March 18th was Uber, even though the market was tanking into the close, Uber ran out of sellers. There was no news, there was nothing, but it hit a low of 1371, but it closed at 1482, which is a pretty significant move. It's around over 7%, 8% move back off its lows for the day, even though the market was tanking into the close, okay? And when I saw this, I started buying Uber because it was showing me strength in a weak market. Now, the next day, Uber came out and let everyone know that they actually have billions more in reserve than they thought, which spiked the stock back up to 21. And that's how it usually happens. You usually see the move in the stock before the news comes out. And a couple of days later, Uber was at 28, which made for 100% return in a stock move, which is pretty sick. So that's what we're looking for. That's how I showed you the Beyond Meat, the Shop, the Tesla. It all starts with this kind of outlier experience. That's what I look for every day. And it works the other way. This is when the SPYs moved from 246 to 261. Again, that would be like a 1700 point move on the Dow. Markets were up. So on March 26th, the markets were up big. What am I going to look for? I'm going to look for weakness. And I see Roku, which had been at 94, was down to 89. So it was down 5 points on no news with the market up significantly. That leads to a bearish play. The next day, it drops 6 more points. Okay? All right. And again, this is a chart look. I just gave it to you with the numbers, the prices. Now I'm showing it to you with the charts. It's the same thing. This is a chart on Spotify. The light blue is the Dow. The purple is S&P 500. This is Spotify early on when it was trading. Look at the top. This is the move it started to make at 149. Okay? And it broke out from there. Shopify, same thing. This was Shopify at 441. It went to over 600. It hit 660 the other day. So these kind of tells in a stock can lead to really big things for you. So I'm going to show you the original Phoenix letter, because this is called the Phoenix letter, what I'm showing you right now. The original one, the 11-year bull market, which is very relevant to what we're doing right now. And then I will go over why we brought the Phoenix back. Got a surprise for you. We'll talk about emerging opportunities, and any questions you have will be answered, okay? All right. For those of you meeting me for the first time, I've certainly worked with Jeanette and Hubert before, but I know this is a big event conference, so I'm hoping that I'm meeting some of you for the first time, and I know I'm seeing some of you again. Hello, Stefan. Hello, Suj. I know some of the names. Quick background to me. I was a trader, first and foremost, not a marketer. It started with this article. Nelson Schwartz, who now writes for the New York Times, and he wrote for Fortune Magazine, came to my firm. He said, who should I watch trade? They said, go watch Adam Mesh. And he stood behind me and he watched me make $10,000 in a few minutes. He did this article, clad in a scruffy old t-shirt and desperate need of a shave. I still got my gray t-shirt on and I'm still in desperate need of a shave. Okay, some things don't change, but this article went viral. It got me a lot of good press. A year later, he did a great follow-up article. A year after that, he did a great follow-up article. I ended up on The Tonight Show, and everyone's talking about my trading success and people writing in, asking for help. I started with the newsletter, then I started providing education. And then after you do all of that, everyone says, what are your best trade ideas? So in 2009, I launched my first subscription service, which was called the Phoenix Letter. It was after the 2008 crash. And the reason why you know that wasn't luck is because the Phoenix is the mythical creature that rises from the ashes. And I named it that because I thought 2009 would be a tremendous opportunity, the likes of which we haven't seen until now, right? We haven't seen the market crash then until just now. So it's actually perfect timing for this webinar, okay? In the original Phoenix letter, we used the same formula that we use now, but there were differences. Then we traded stocks. Now we traded options. I'll explain why we switched, but I want you to show you the formula worked then and now. The most important thing is the formula, right? Whether you're trading stocks, options, whatever it is, if you're not making the right trades, you're not making money. So we want to find the right trades. That could be for stock or option. I switched from stocks to options. I'll explain why, but this is the original service. PNC was the first stock we bought in the original Phoenix letter, and it was at $16 in March 2009, and it went to 129, which is 800% return. Wells Fargo, I remember buying it in 2009 at $8 and saying, the worst case that happens, it goes to zero. But Wells Fargo went up to 54, which is 675%. Other stocks, BlackRock. This was a little known stock at the time, but it also started to represent one of the problems we would have in the original Phoenix letter, which were things got too expensive. We got into BlackRock at 130. It ended up going up to 594. Nobody can get into a $594 as a stock trade unless you're buying like a share, right? So instead, people just get left frustrated because they can't participate. It identified JP Morgan. This is a famous trade because everyone was getting out of JP Morgan at 35 because the London whale had just lost $1 billion, but $1 billion is nothing for JP Morgan. Our formula got us in, and JP Morgan was off and running. It identified a little known company called Salesforce at 25. before it went to 162. Starbucks at $10. And then Boeing was always my example of when it had gone too much too fast. Boeing had gone from a $25 stock to a $400 stock. And at that point I said, all right, I don't want to put on stock trades anymore when the market's this expensive. And so I did something that was unusual. I shut down a successful long-running service that had a lot of subscribers. And I said, you guys could have other services or you could leave. I don't want to do this anymore. And I took a couple of years off from the Phoenix layer, okay? And the market just continued to go up. And it didn't make sense to buy stocks. I was a little too early. I was a couple of years too early. But it didn't make sense to keep buying stocks after we got up so much so fast. So the Phoenix lied dormant. And then in December 2018, I don't know, that seems like a baby move now, but the market started to get really choppy. We started to see days where the Dow was down 600 points. And then we saw big drops in stocks in a less than 4-week period. NVIDIA went from 260 to 133. Facebook went from 200 to 135, just like it did this time. IBM went from 180 down to the 90s. This time, well, last time it went from 180 down to 105. This time it went down to the 90s. Square went from 80 to 60. This time it went to even lower. It went to the 40s, maybe even 38. So it was interesting to see how this crash did versus December 2018. Some stocks like Apple held their own much better. Some stocks actually went lower than they did last time. Last time Apple went down from 225 to 142. This time it's back up in the 290s. So one of the tells that the market's in play is, number one, when I'm starting getting more speaking requests to talk about the market like I was then. Another thing is when the market moves from CNBC to NBC, from Fox Business to Fox, that's a big sign that the market is in play, right? That there's something going on because the news is talking about it. And I called up JJ, who's on this call with me right now as one of the panelists. And I was like, we got to bring back the Phoenix. So the Phoenix rose again. And the formula was the same, but I made some changes too. So this is when we brought it back. I'll show you the three pillars of our service: market mercenaries, options, individual stock selection, which includes market, momentum, reward. Okay? Mercenaries is just, we had a lot more members now than we did then. And so I wanted to make sure I had more eyes on the prize. So instead of it being just me like it was back then in 2009, now I have a team of people that are looking for what I look for. Christian Thorpe is a CMT, that's Chartered Market Technician, highest level technical trading there is. He breaks down the up and down of the overall markets for me every single day so we could establish risk reward based on where we can go. As an example, the other day, last week, when the market looked like it was just going to go back to its highs and was trading and the SPYs were right below 295, we knew there should be heavy resistance at 300. So we weren't initiating any bullish positions despite how good the market looked. And that ended up being a crucial move. So that's why it's so important to have someone giving you an overall outlook of the markets every day. I got Steve Smith, who has 25 plus years investment experience. He's an expert in options. And before me, he worked with James Kramer at the Street. So great person to have. And Michael Honig, who I call the option stock. So I have a team of people helping me find ideas. That was number one, my team. Number two is I switched from stocks to options. I'm sure some of you trade stocks on here. I'm sure some of you trade options. I'm sure many of you trade both. Let me just go over my thinking really quick. Bottom line is this: the biggest thing that's changed in options from then till now is options are so much more liquid right now than they ever were before. There's weekly options, and if you stick to highly liquid stocks, it's just like trading a stock with one big difference. With stocks, if you wanted to buy 200 shares of Square at $57, it would cost you $11,430. But if you wanted to buy 2 contracts, which equals the same 200 shares, and go out 37 days, when S&P is moving 6% a day, 37 days is a lifetime, and you own the 57 call for $4.60, instead of putting up over $11,000, you can put up just $920. Okay, so you get a lot less risk. And we know now when Square went from 57, you see up here, let me just check for it real quick. When Square went from 57 to 74, that's a 17-point move in the stock price. The options went up from 4 to 17. And with 15 days remaining, we don't have to hold it to expiration. We're up over 400% on options trade. We could just close it right then and there and feel great about ourselves. That's the power of options, okay? So you have my team, you have why we switch from stocks to options. Now the most important part is the formula. This is the approach we use for every trade we make. Market, momentum, reward. And these are now all going to be examples of trades we put on in the Phoenix letter and the making of the trade, which is so important to show you how we got there. Okay, so on this day when the Dow is down 558 points, we're going to look for strength. And the first thing we find is Celgene. It's up 14 points with the market down 600. Trade it, right? No, because Celgene had news. They were getting bought by Bristol Myers. Remember, it has to be on no news. But we were going to look at Guild. Now, Guild was up in sympathy with Celgene. That's what happens when there's a takeover play, when there's M&A in play. You look for the brother and sister stocks that are going to get thrust into the spotlight, because usually when there's one merger, there could be more. So we identified Guild at 65, which, by the way, is a very popular stock today with everything going on. And after we identified a strong stock on no news in a weak market, the next thing we want to make sure of is if we trade it, will we get paid? The last thing you want to do is be in a stock, have the market do what you thought, and the stock not do what you thought it would do. You want to make sure that there's enough room for the stock to move so you get the reward you're looking for. So in this case, a simple chart of Guild shows it was as low as 65, it hit 70, 75, 80, 85. It had been in a 20-point trading range over months, which means we should get at least a 5-point move if we're right, which means it's worth trading. Now, if we were going to buy 300 shares of Guild at 65.93, it would cost $20,000. We don't want to do that. So instead, we're going to buy 3 contracts of Guild, go out 29 days, again, more than enough time, the 66.50 call. It costs $2.40. So instead of putting up $20,000, our risk is just $720, okay? $720. And Guild goes up, we close it for 19%. One of the other things that was really important to me when we brought back the Phoenix letter was I wanted to make sure that beginners and intermediate traders felt comfortable getting started. The pros are going to do what they're going to do. The advanced option traders will take your trade. They want to put on 50 contracts, they'll put on 50 contracts. But it's the beginners who I wanted to feel comfortable. And I learned the most important thing is to get people off the ground with those first 1, 2, 3, 4, 5 trades. So what I started adding at the bottom of every alert was a very simple sentence. Let me know if you got this. I was curious how many people were actually participating at the beginning. And you know what? When people say no, we can help them and figure out why so that they can feel comfortable making their first trade. And so I always say, let me know if you got this. And then someone like Ron wrote in, hello, my first trade was AT&T, so this lift trade was my second one. I only bought one option, and on the third day, I sold it for a profit of $396. That pays for the cost of the Phoenix option service. Thanks a bunch. So good. You know, I don't want to show you someone making $5,000. That's going to be unrealistic, and I don't want most people taking on that kind of size to start a trade. But that first trade, that first win, $396, that's what we're looking for. Thomas said, it's great service. I paid for an entire year with existing profits and made more on top. David said, this is my first Phoenix trade, made 60%. Looking forward to the next one. Arnold said, signed up for Phoenix and the lift option trade was my first one. I decided to take a bit more risk and go for the 25 strike price and close today with 30% profit. Amazing. Okay? And we keep track of all our trades in what's called a trade portfolio manager. So at any given time, you could go look at all our old trades and our existing trades. It shows you the date the trade was put on, whether it was a buy or sell, whether it was a call or a put, the underlying stock, in this case Square, the quantity we traded, the expiration date, the strike, the price, and you see the total profit and loss at the top. So everything is tracked for you, okay? I want to take you through a couple more trade examples so you really understand. Because if you like the way I trade, you're going to want to trade with me. If you don't, you're not. It's that simple. So I just want to show you my approach, what I'm looking for every day. This was Papa John's Pizza. Light blue is the Dow, purple is the S&P 500. Here you see the market going up. Our divergence is down. Papa John's is going away from the market. Now, this is interesting because it brings in fundamental and technical news. The fundamental news is like, you like Starbucks coffee. You think Lululemon pants look good. You believe in Tim Cook at Apple. You believe in Jack Ma at Baba. Technical is this stuff, the charts. Now, you could get trading ideas based on the fundamentals, right? You could be a big fan of Twitter and start watching Twitter. You could get stock ideas from anything, but when you actually execute, it should only be based on the technicals, okay? So in this case, there was Papa John's Pizza had come out with a new policy that they were going to do a franchise loyalty initiative. And this meant that any struggling franchises, rather than letting them fail, they would just subsidize them to keep them in business. Just like the government would subsidize weakened industries during the trade war. The only difference is Papa John's Pizza doesn't have unlimited funds like the government does, right? So it seemed like a really bad plan. The question was, did the stock match up to it? And when we looked, it was really starting to underperform the market. So yes, we had the technical confirmation. So we put out an alert to buy puts in Papa John's Pizza for $1.60, okay? And by the way, we know this is a bad plan because they ended up replacing the CEO. So the minimum you could have done this trade for was $160. And you don't have unlimited exposure when you're buying a put. The most you could lose is $160. Papa John's Pizza started to tank. We sold some at $3.30 for 100% profit. And then we sold the rest at $5.05, which was over a 300% profit in Papa John's Pizza. And this is what the alert looks like. Sell to close 1 PZZA put for around $5.05 or flat, great trade. And we give you a screenshot, okay? And then we keep track of it in the trade portfolio manager. Here's where we sold the different amounts, some at 215, some at 330, some at 505. And here's the profit. And again, you could have done this trade for a minimum of $160 risk. Okay? A couple more. This is Activision, video game maker, breaking out of the market. That's going to be a bullish Phoenix trade. We got in at 251. We got out at 395. AT&T, typically a boring stock, right? But it had a strong divergence, and then there was no news then, but later on, we found out there was an active investor who was calling for changes within the company, which led to a really big move. So if you see at the top, we bought AT&T calls when it was trading at 34 for $1.52. So you could have made this trade for a minimum of $152 and sold it for $4.45. On 10 contracts, that would be $3,000, okay? That would be more than $3,000. No, actually, that would be like $29.50. Okay, but on one contract, you put up $152, you're making $445. So it works for anyone. Okay. Take two. Over here, we get the breakout of the market. I know it's the same formula every time. I know it's the same thing I'm showing you every time. But if you had a button, and every time you hit that button, you make money, wouldn't you keep hitting that button? I would think the answer is yes. And some people say, no, I'd go and invent a different button and use that. Oh, no, you keep hitting this button, and then you could still work on other buttons at the same time. So we just keep applying this formula, okay? Take two, we got in, we got out at 370. This is a 37% winner. And again, we always ask people to let us know if they made the trade, okay? This is how we did since we brought it back. We brought it back in December 2018. We've never had a losing month, but I think the more relevant thing, besides the equity curve being a thing of beauty, is how we do this year with the market crashing. Same thing, trading options. The volatility has helped us in 2020. Through the first 4 months of the year, we've already outperformed all of 2019, okay? And we've never had a losing month in 2019. So this strategy works, the formula works every week, every month. This is what I look for every day in my trading. And I'm going to show you present examples now, because I can't let you say, well, what happened in March and April? March was one of the best months we've ever had. But let me go back to that Beyond Meat chart I showed you at the beginning. At the beginning, it looked like one chart that was just kind of level. But when you look at it versus the market, right? Remember at the beginning, I showed you that Beyond Meat chart, and it just looked like a boring chart, but then it exploded out of nowhere. But now when you add those two lines and you see what Beyond Meat was doing versus the rest of the market, now you understand this was a Phoenix trade, okay? This was a breakout opportunity, and we made 70% in Beyond Meat for the Phoenix letter. Alex said, do the Phoenix just the ATVI trade in at 241 out 395, 64%, 616. Chuck, fastest 350 I made. Michael, the best experience with options I've ever had. I lost so much money in the past. Now I'm beginning to get out of that hole. Yours is the best service around. Thanks, Adam. Thanks, Mike. Sometimes if we don't have any bullish Phoenix trades and we can't find anything going on in the market, we'll go bearish like we did February 21st. We bought puts on the SPY when they were trading at 329 for $4.56 on a Friday. We sold them on a Monday for $7.75. And then we did it again. This trade became pretty well known in the industry. We bought on February 21st, the 333 puts in the SPYs, the top of the market for $2.25 because there was no volatility on a Friday. And we sold them on that Monday for $9.75. Okay. And this is what it looks like. The email goes out. We show you the symbol, the price it's trading at the time we're sending the alert, our current position, all the details. Sell to close one of the 221, 329 puts for a net credit of around 775. We give you a screenshot of where it's trading at the time. This is on the Tastyworks platform, by the way. You're going to hear from Tom later. And this was a sick trade. And at the top, I crossed out people's last names for privacy, but this is what people are writing back to us. I ended up getting out at 750, but I'll take the 65% win for sure. Really nice trade, closes for 65%, right? You could just stay with me at the top. And this is just people responding to the emails. Great trade. In at 448, out at 850, $785 in 2 contracts. Great call, in at 405, out at 774, 91%. Okay? So now we'll fast forward to some of the most recent trades. We'll do March and April trades. I'll even take you to a trade we closed last week, okay? But in Starbucks, we started to see in March, Starbucks had gone from 89 down to in the 40s, and then it came up to the 50s. But it was down almost 50% on the year. But we started to see Starbucks outperform the market. We saw this Phoenix pattern that we look for set up, okay? And so we sent out this alert right here, which was buy to open 2 of the 55 calls for a net debit of around 530 within 50 cents. And this was in March. We were buying the April 17, 55 calls for 530. It was a little more expensive because the market was crashing, so premium was high. So here's my question for you. Based on everything I just showed you right now, and I showed you that chart of Starbucks, you know it just went down 50%, almost 50%. Knowing this would be your max risk, if you got this alert, would you buy the 55 calls for $5.30? Just chat in yes or no. I like to know how you think, yes or no. Would you put on this trade? And if you say no, if you don't mind, I'd just like to know the reason why. And it helps if you participate. There's over 500 people on here. Let them fly with your answers. I like to see. Got some MVPs on here. Right? And now I have another interesting question. Too expensive, Thomas said. Okay. Now I have another. The average contract we put on, by the way, is $2.70. That's the average cost of contract. Now, if you put this trade on and you lost, would you be mad? Would you be mad if you lost? Right? No. Right. Because it's part of trading, right? Z would be mad. Okay. So that's part of trading, and that's the attitude I like people to have. But if you put this on for $5.30, the next day you would have closed it for $9.55. Okay? This is a great trade, almost 100% return on Starbucks. So if you were willing to participate, you would have been rewarded. Okay? So happy to tell you, I just did over 100% in Starbucks. I literally doubled my money. You're awesome. Thanks a million. Just renewed for 6 months. Can't wait for more winners. Okay? The next trade after that was work. Again, same chart. Work breaking out. There you go. If you saw this chart and then you got this alert, it said 1893, buy it open 2 with the April 17, 20 calls for a net debit of around 240. Minimum you could have done this trade for was $2.40. Would you have made this trade for $240? Just answer in the chats. It's more fun if you all participate. There's a lot of you here. This guy said, you would have done this, right? This guy. And even the people who went on the last one, so you would have done this one, okay? Well, this isn't hindsight, right? This is the beginning of the trade, okay? Okay? All right. And we sold it the next day for $3.90. And I even said, I like the stock and I think it's going to go higher, but long term, it's a volatile market, so we'll take our profit now and move on. And honestly, we sold these for $3.90 and we should have held because they would have been worth $7. I said this could run another couple points, but I think quick profits make sense in current environment. So you could always make informed decisions. Okay. And then this was when the market was running up over the last couple of weeks, right? I saw this chart in IBM. And you look, now it's reversed. The S&P 500's up here. The Dow's over here. IBM is weak versus the market. Okay? So this is just going to be a reverse trade. So over the last couple of weeks when the market was running up, even though the market looked good, we knew where our resistance was. S&P 500, 3,000, that's 300 on the SPYs. IBM was going up less than the rest of the market. So we put on this trade when it was at 126 and we said buy it open one of the 515, 126 puts for net debit around 445. Okay? So even if IBM went to 1,000, the most you could lose is $445. And the market kept going up. And IBM, these contracts went down to $2 and change. And some people started writing in saying, what are you doing? What are you going to do? What's your plan? And I said, listen, I know the market's still going up, but this stock, this is what I was looking at. And I want you all to see it because it's important. I was looking at this and I was like, this is a stock you want to stay bearish in. And we have multiple weeks remaining on this options trade. The most we could lose is $200 more. I'm not staying in it. And one person wrote me something like nasty, like, oh, this is going to be a loser. You stink. And I wrote to him and I said, listen, this trade could be a loser. And I'll tell you what, if it is, I'm going to double the length of your subscription. But what happens when it's a winner, which I think it will be? What are you going to do? And they didn't answer. Okay. And then IBM corrected, the market came down. We sold it for $6.35. It ended up being a 48% winner. And I emailed the person very nicely and I said, did you stay in the trade? And they said, I did. I made 48%. Thank you so much. I appreciate you. I didn't even think you would respond to me. I do care what people think. I want you to understand how I think, and that makes for a better experience. When you understand, okay, I have 2 weeks remaining, this stock's weak versus the market, and the most I could lose is $200 more, heck yeah, I'm going to stay in this trade, okay? So that's what we do. If you like the way I think and you want to get these trades every week, these are the trades I put out, this is how you can take advantage. I'm offering access to the Phoenix letter today. I showed you the whole formula. You could use it for yourself. But if you want me to spit these trades out for you, we're either going to buy calls or puts with defined risk. I'll send alerts via email and text on any position update from entry to exit. We explain the why behind the trade. Obviously, there's always exclusive training. Every week, I'm teaching, so you understand how I think. And we have an unbelievable customer support team who's with me today. And it's at adammesh.com/EMC. And let me just show you the pricing. The Phoenix letter, it's a $29.95 a year service. But when you speak at these live events, you got to be competitive in pricing because you guys are going to hear different people offering different things. I mean, it's crazy what some people offer. So I just wanted to be competitive. So you could get 1 month for $89. Your price will never go up. You can lock in that price. Or the better deal that I think you'll like is 6 months for $397. You lock in this price, it will renew at that. Your price will never go up. $397 for 6 months. That one Starbucks trade was worth more than it, right? The IBM trade made 48%. The Slack trade, I mean, this service has never had a losing month. I'm sure one day it will, but it hasn't so far. And you're going to get these trades every week. adammesh.com/EMC. First 100 people, anyone can sign up at any time. You could always sign up for this service. You know, because it's all liquid options and we're not going to affect the movement of the market, there's no limit on the members we could have. So I'm not telling you if you sign up, you don't sign up today, whatever. But I do like on these events, because you're getting hit with so many offers, to give you perks. So the first 100 people to sign up right now get these perks. You get the Phoenix value. That's the value. That's the lowest price we offered it besides on these live events, $13.95 a year. You get the insider call. That's my Tuesday call every 1 p.m. I do it today. If you're on this and you can't make it, it's recorded and you can listen anytime. We come on, that guy Christian, the CMT, breaks down the overall market. We go through the different services, and then we just talk about stocks. So like when oil went negative, we talked about that. We'll talk about gold. We'll talk about which stocks have earnings. And it's just a lightning round of people literally writing in about stocks and us answering. You get that call every Tuesday for free if you're in the first 100. We have an Options Academy on Monday, every Monday at 11:30, 2 options pros on there answering any question you have, as basic as you want to get. Just more support, you get that too. We also have the Marijuana Insider. It's $147 a year. I'll tell you more about that in a second. You get that for life when you sign up today at adammesh.com/EMC, or you could call the number on the screen, 212-774-5983. Okay, 212-774-5983. When I was on Fox with Maria Bartiromo, they were talking about Bitcoin at 17,000. And I said to stay away. This was my quote. Bitcoin outlook, months away from its first horror story. And I think Bitcoin went from 17,000 to 3,000. I don't like Bitcoin at all. But I realized people were looking for alternatives. And so I asked some of the top people I knew, what would you trade 5 years from now? Crypto or weed? Everyone liked weed. So I created this weed research report that comes out every single week. It's $147 a year because it's not doing buys and sells. It's just giving you all the latest news on the weed industry. You get that for life when you sign up for this at adammesh.com/EMC. And you also could get a prorated refund anytime. So if you weren't happy, it's I'll do a calculator on the phone because that's the best way to do it. Here. So you do $397 divided by 6. So your total risk is $66. So if you left after month 1, you get $331 back. And you would keep the Marijuana Insider for life too. So it's a very, very competitive offer. adammesh.com/EMC or call 212-774-5983. And I also left, good. I left time for questions. Nailed this presentation. Plus, I think Jeanette and Raleigh will be really happy with me because there's actually more people on now than when I started. So I held the crowd. I think you enjoyed this presentation, but how many trades? So now I can answer questions, which is perfect. How many trades per month on average? Thanks, Scott. So it's 1 to 2 trades per week. We actually traded 4 trades. I've had well over 70% win rate. Some stats, well over 70% win rate. The average cost per contract is $2.70. We've never had a losing month. But I just spoke at a big expo a couple weeks ago, and I put on a trade in Lululemon that was a loser, and I was like, shoot, I can't have all these people having a losing trade. So I was like literally trying to find extra trades, but it has to be this formula. So we're usually disciplined. It's usually 1 to 2 trades per week. But after we had the Lulu loser, we kicked out a winner in Intel, then we clicked out a winner in eBay, then we clicked out a winner in IBM, and turned that into a winning week. So which is good. So we just did 4 trades in like the last 10 days, but usually it's 1 to 2 trades per week. John says, can you guarantee on the 1-month offer? No. And I'll look you in the eyes and tell you, it's very frustrating for me as someone who puts all his heart into the trades and answering any email, for someone to like not do anything and just ask for their whole money back. I'd rather you not join. I want people who are going to show up, participate, look at the trades, interact, ask questions, but you got to have something at stake. If $67 isn't worth it for you to be at stake, then don't do it. It's fine. But I like people to have some skin in the game. It just, when you go through and in 4 months you beat all of last year where you never had a losing month, and you put on all these winning trades and success, and people just leave because they never looked at it. I want there to be skin in the game on both ends. It works better for me. I understand that will get less people in, but I want the people who are going to stay with me. So I hope you can respect that, John. Do you have a way of guiding a first-time options trader to take these trades when you put them out? Yeah, you could call our support desk for extra help. We have the Options Academy on Monday where you could ask questions live. On Tuesday, you could ask questions. So we're really good at catering to beginners, Juma. Got online late. They're all calls or puts in this service. This is a basic service, okay? If you pay twice NAS by accident, then we'll automatically refund one of them for you. You just paid twice by accident. On the 1 month offer, on the 1 month offer, you do keep, you keep that marijuana thing forever. Are you using at the money options versus out of the money? We're typically at the money. If it's a really expensive stock or a crazy stock like a Lululemon, then maybe we'll go a little out of the money. Scott loved the presentation. Roy, I answered your question, right? Roy, how many trades? Nice, that's all we want, proof of salsa. Awesome, can't wait to have it. Dennis said, only been with you for a week, got 247 out of my 395 back. Awesome. Scott, thanks for joining. If you know how to do spreads and you want to do them on your own, you can fill up. It would reduce some of the risk in the trade, but it would also reduce some of the reward. I'm watching all day long, okay? Yeah, when you join through your link, you can see every trade we've ever made. Mark said show all winners. What about losers? So we had 3 losers this year. We had BlackBerry trade that we put on for 22 cents that expired worthless. That was $88. Chronos trade we lost $70 in, and then the Lululemon trade, which we lost 400. So our biggest loser this year was 400, and we had several winners over 800, which is what you want, a 2-to-1 on your win to loss ratio, and we're winning 70% of the time, so that's good too. Okay. All right. Okay. Will you show the slide with all your offering? Sure. There you go. The dude right before you put the hardest on. Yours is refreshing. Thanks. What if all I cared to sign up for were the alerts? That's the value of it. All the other stuff is to help you get there, but the value is the alerts. Right? Cool. So yeah, if you have any other questions, you can call 212-774-5983. Go to adamesh.com/EMC. This is my first time where I did the video of me in the picture while I'm speaking. Usually it's just the screen. Are you okay with that? It's funny, I have 2 screens up, so when I look at this one, I see I'm not making eye contact, but I guess with this one, I'm making eye contact. Just signed up, thanks. You do stock picks as well. You could use them for stock picks. All right, great crowd. The minimum amount's up to you to be able to trade. I always think it's up to you. I'd say, 20, I don't know, 2,500 minimum. But it's risk capital, like not money you need for rent or food, anything like that. It's got to be money set aside for trading, right? But I hope you enjoyed this. Do you use one of those 4-screen platforms? Is that necessary? Well, it's funny. In terms of Ray, the platform, the person who you're going to hear from next is my favorite trader of all time, Tom Sosnoff. And I trade on the Tastyworks platform. I'm a proud brand ambassador for them. I had been with other companies before Tastyworks ever came to life. I probably used them all. I was a beta tester for the original Lightspeed. So platforms for me is really important. It's like if you're a race car driver, your car is your tool. If you're a trader, your platform is your car. And for me, Tastyworks has been like the best car I've ever driven. while all other platforms were freezing up when the market was crashing, this didn't experience a glitch. It was built by traders for traders, and it literally is like the Ferrari of trading. The pricing is amazing, but even if the pricing was more expensive, if I was on their board, I'd be like, we should raise our prices because the platform's awesome. The pricing was like $0 commission to close, but the platform works so well, and it held up. Robinhood kept freezing, all the other apps. Do you know what it's like when the market's crashing and you get an order stuck for 20 minutes? That stinks, especially if you're trading big size. So I love the way it held up. The best thing I could say about the Tastyworks platform is this. It would be like if you were in the final 4 laps of a race and you knew you were supposed to pit, you'd be like, no, this can handle it. We're going to the finish line. We're not making a pit stop. That's how I think of it. And then from the education point, you're going to hear from Tom Sosnoff right after me, who's just the man. I've learned more from him about options than anyone else. So many different things from, buying away from the 30 delta, selling at the 30 delta, optimal trade time, 40 days. You're just in for a real treat. So I can't wait for him in a sec. Glenn said, love the Phoenix. Wish we did 4 trades per week, waiting on the next one. Is this the same Glenn I used as one of the testimonials? That'd be pretty funny, or is it a different one? Glenn, does your last name begin with an N? How far out we go on the trades? Oh, it is. Okay. How far out we go on the trades depends on the timeline. If it's a more volatile, high premium trade, we'll probably shorten the strike. We don't want to trade through earnings. If it's something like AT&T, we could go out like 60 days. You can't get through that number, so you can just use the screen or email Stephanie@adamesh.com. I love your presentation and energy. I love the innovative formulas. Thanks, Shuma. Helpful analogy. All right. So, Jeanette, Raleigh, I think I did good for you guys. I caught you up on time. I made back your time. The crowd increased while I was here. And, I just want to say that, you got the king of the industry coming on now. And Tom Sosnoff literally knows more about options than anyone I've ever met. If you think I'm passionate, he's the only guy I've met that's more passionate than me. So really, you're in for a treat, and you're going to learn a whole lot. So enjoy it, okay?
Adam, I think you're on the fence a little bit about Tom. I don't know.
I'm a groupie. He's like the Bon Jovi of trading for me, and I love Bon Jovi.
That's awesome.
All right.
Thanks so much, guys. Great crowd. I love seeing it grow. Good energy, positive people. All I could ask for, okay? Thank you.
Thanks, Adam.
Thank you, Adam. Thank you.